Hello traders, hello everyone, my name is Grega Hurat and welcome to our new video here on TradingView. Now today I want to talk about gold. As you know, gold has seen a very nice recovery over the last few years. However, market just moved sideways here since COVID crisis. And looks like that there is still that we are still not going to see a break to new all-time highs. There was a very nice and strong move close to all-time highs based on this situation in Ukraine. So because of this military threat, especially even on global scale, of course, traders are looking to run towards safety, and gold could be one of it. However, gold was able to come down a little bit in the last 2 weeks or so, and the reason, of course, is also the Fed's hawkish policy, who will do everything what's necessary to fight the inflation. So that's what puts the high in on gold. It's also about the speculation of how many hikes may happen this year. However, if Fed will suddenly turn to be less aggressive than most expect, then of course this will once again cause a new stabilization of prices on gold. But for now, it looks like that the current tone will not change. So metals, in my opinion, have room for more weakness in the short term, okay, just in the short term. So let me try to describe my views here a little bit better in a second. So what I'm looking at here on a daily time frame is that I'm still actually expecting more upside. Will be looking for more gains after this wave 4 will complete the consolidation. For now, that's still not the case. I'm actually observing two ideas, okay, in a wave 4, because wave 4 it's a corrective pattern, so it can form in different shapes. What I'm looking at is for a potential triangle or a flat. Okay, so I have here this also the basic technical charts to give you the full perspective what the triangle, what the flat is. So here I'm tracking, actually I on the real-time chart I put in like we are maybe in a triangle. So let me go this step by step. Now triangle is an ABCDE pattern. Okay, so you can see here I have a sample. So here's an ABCDE, while the flat is only structured by ABC. And what's the common about those two patterns is that in each leg of wave A and wave B, you have three subwaves. So here you have three subwaves down for a wave A, and then a three subwaves up for a wave B. And then you have here three, in a triangle, three subwaves down for a wave A, another three waves up for a wave B. But the difference is that in the upcoming wave C, in a flat, you see the 5-wave drop, where the price can take us all the way back to the starting point of this wave B, or maybe even beyond that level, while in a triangle, wave C is made only by 3 waves, not in 5 waves. Okay, so for now, if you look and compare the current situation on real-time charts on gold, it looks like that we are here, okay, here in this very minor swing high point, okay, based on both expectations, based on both shapes, I should say, we are expecting more weakness in the near term, because even if it's going to be a 5-wave drop here for a wave C, well, you still need to see more weakness here on real-time charts to complete this 5-wave drop. Even if this is going to be a very big triangle, well, you still need 3 subwaves down, right? And for now, from the highs, as you can see here, we have only 1 leg down, pullback now, meaning more weakness, even if it's going to be a triangle. So this is what it's so very interesting about the Elliott wave principles, is that I have two different interpretations, but both suggest the same direction, at least in the near term. Even if it's going to be a 5-wave drop for a wave C of a flat, or maybe a 3-wave drop for a triangle. Okay, and why I think we could see more weakness is because if you look closely here on the 4-hour time frame charts, okay, I will label this one for you. you can see that the drop here is from the highs in 5 waves, right? So you have waves 1, wave 2, you have a wave 3, wave 4, and wave 5. Now, if you were wondering, wave 5 was an extended leg, okay? So let me also label it like this. Okay, so you have these 5 waves down. What comes after 5 waves? Well, you will get a 3 wave correction. So now we are tracking an ABC correction. And what's interesting is that market is already responding towards the bearish case after this 3 wave rally. You are at the moment at this trend line. So looks like that we are either going to see a breakout early this week and we will continue straight down towards, I'm looking at this retest of these swing lows here, or maybe we will see this wave for a little bit, this ABC rise a little bit more complex, but still part of this bearish sequence. So as long we are trading below this highs here from earlier March, I will be looking and expecting more weakness on gold here. So as I said, even if it's a triangle, even if it's a flat, in either case, I think there is going to be room for more weakness, because the first drop here from recent highs unfolded in 5 waves, while the current rise is in 3 waves, right? Okay, now also I like to pay attention to candlestick formations, okay? And if you look very closely here, you can see that this looks like an evening star formation. You have this very long body, okay? Then you have this move to new, close to new all-time highs, okay? Where a lot of traders were probably rushing into gold because everyone thought that market is going much higher. Well, unfortunately, if there is something too aggressive, too bullish, it most likely the market will do the opposite. And what we have seen is this very nice spike, and then the following week a very nice this bearish body. So this forms like a very nice, perfect evening star formation. And from that perspective, we also think that this market could continue to the downside, even if just short term. So we have a candlestick formations, and we have also this Fed policy that suggests gold weakness, and we have the wave pattern suggest the same. Also, what is very important and interesting to look for is US dollar. Okay, so what the US dollar is doing? Well, I will take a look at dollar index, and so far what is interesting in the short-term charts is that market is trying to break, let me hide this, is trying to break out of a triangle. Okay, so you have an A, B, C, D, E pattern, and looks like that this triangle will send prices higher. So where I'm looking at, well, I would be looking towards 100 level. This is a very strong psychological level, so I think it could be retested in the next few days. And it's that, if that's going to be the case, okay, then obviously strong US dollar could make even better case for bearish gold. Okay, so I'm looking for more upside here on US dollar index, and this breakout maybe could be a catalyst for metals to see even more weakness, including everything what I've just described on gold as well. Also, once we will reach this 100 level, keep in mind that around this 100 level we have a lot of important swing zones when we look back 2020 highs, swing highs. So this could be maybe a next level that we should pay attention on for potential maybe limited upside. But for now, in the short term, looks like there is room for more upside here on the US dollar index. While at the same time, I think this gold could see, as I described, more weakness. Okay, traders, thank you very much for attention. I hope that you enjoyed this video. Please give me a like if you love the video, or leave me a commentary below this idea. Okay, have a good day. Bye.